with us today, kicking things off. Good morning to you.
Good morning, Raleigh. Good morning, Pat. Thank you for having me.
Thank you, Matt.
Okay, so I'm going to stop the share there, Matt, so that you can go ahead and grab the screen.
Absolutely. Okay, so everyone just momentarily should be seeing my slide deck. Can you see can everyone see the YouCanTrade logo there?
You're
Yes,
good
we
to
can.
go.
Looks
Okay.
great.
Excellent. So again, thank you, Raleigh and Pat, for having me. My name is Matt Hensley. I am a trading coach and an options and futures trader over at YouCanTrade.com. And I just want to put this, you guys will see a lot of these disclaimer slides. Don't breeze past them. Do give them a read. You don't necessarily need me to read this to you, but I'd like you to just take about 30 seconds here and look through this and just understand this presentation is for educational or informational purposes only. I'm going to be looking at some live charts here towards the end of this presentation. I may point out some things that I'm looking at or that I like. Don't take that as a recommendation to buy or sell any particular security. So with that, like I said, I'll leave this up just a few more seconds, and then we're going to get going with the presentation. I'm really excited to be here with you. I get to do a lot of these events. I don't do a ton of them when the markets are open. So I'm excited to, as we go through one of the strategies that I'm going to be talking about, I'm very excited to go into looking live at the markets. I do ask, just because of the way the setup is today, hold your questions to the end so I can pull up the chat window, or they can be fed to me. Regardless, I do like to at least leave about 10 minutes for questions at the end. And if you go back here, guys, there's my email address. And there's my Twitter handle. If you're watching a recording of this, or if you think of a question later tonight, make sure you just shoot me an email. I try to be very responsive to client emails, typically within 24 hours. Sometimes they stack up after events like this, so please bear with me. Okay, so I am the head trading coach at a channel on YouCanTrade called Two Roads Trading. I'm a big fan of the Robert Frost poem, so that's kind of why I chose that name. And the topic that I'm going to be talking about is the 5 moves the market can make each day, and a credit spread setup that you can take with you. My workspaces that you will see within the TradeStation platform. If you happen to be a TradeStation client, you can email me. I'll send those to you for free. That's something I'm just happy to share and help. So what are we going to go over today? Okay, average true range and how I use it. 5 market moves. One of my favorite credit spread setups, which includes a live manual scan for setups, and then we're going to do some Q&A. I'm going to get through just a couple of these slides fairly quickly because I do want to make sure we have time before the top of the hour to get into some charts. I mean, that's what we're here for, right? To dig into some charts and to see some of these things playing out in real time. Now, one of the things that I'm going to be talking about pretty extensively today is the average true range, or you'll hear me refer to it simply as the ATR. So when you hear ATR from here on out in the presentation, I'm talking about the average true range. The average true range is a market volatility indicator used in technical analysis. So you'll hear people talk about volatility. You'll hear people talk about price expansion, contraction, and I talk about all those things as well. But one of the things that I look at that's just a little different from everybody else when it comes to market volatility and price action, expansion, contraction is that ATR. Typically a 14 period. I'll spare you how it's calculated. It's like a grader of 3 different potential calculations. But long story short, it's predominantly used and I'll show you how I use it, predominantly used to just talk about what the expansion of volatility within a particular stock. Okay. The definitions here are from investopedia.com. They have a great article on this, and I encourage you to check that out if you want a little more information. Now, the 3 ways that I use average true range. So 3 things within my day-to-day trading that I will use the ATR to show the magnitude of market movement. And it's actually, I know this event got moved, and I'm glad. As I look at the charts this morning, I'm glad it did, because the market has shown some real magnitude of movement. We're going to get into the SPY and Q charts momentarily and show you some of that and show you how the ATR has ticked up, especially over about the last 2 weeks. So that's something that you'll be able to see play out on the chart. I guard against chasing entries, and I'll demonstrate this more when we get into the charts. When I was a brand new trader about 7 years ago, I struggled with chasing. I got started in the small caps. I was seduced by the small caps, as a lot of new traders are. And one of the things that I really struggled with is chasing trades. Well, it's $2 stock. It's up 30% today, right? Oh, it's got to go up another 30%, right? So I'm buying. Well, then it goes down 30% the next day. There's an offering. There's a scandal with the CEO or whatever the case may be. And so that chasing, I was then penalized for that, as I had to learn the hard way, right? And this goes into kind of one of my themes that you'll hear is knowing yourself as a trader. What are your strengths? What are your weaknesses? And that takes time to figure out. It took me a couple of years to really gravitate towards the style and asset classes that I've eventually chosen. And again, part of that comes from introspection. Part of that comes from being honest with yourself. We're not getting deep into trading psychology today, but I am a huge believer in the trading psychology, the mental edge within trading. And so that's something that, again, I talk about at most presentations. We're not really going to get into today. And there's a particular credit spread setups, which we're going to talk about momentarily. I'm going to give you the rules, and we're going to look at a few examples of it that we're going to talk about. So I'm really excited to bring that to you. Now, for the purposes of what the market can do every day, you hear often somebody say, there's only three things market can do every day. It can go up, it can go down, it can stay flat. But really, there are classifications of those moves that I like to use, right? And this sort of helps me structure and frame my entire swing trading. I'm a futures day trader. If I wasn't here with you, that's what I'd be doing right now. So I'm not overly concerned with what the market's doing hour to hour so much as minute to minute when I'm doing that. But as far as the swing trading side of things, which is predominantly where I play options, okay, the whole structure of what I'm looking at, what I'm looking for, and the types of plays that I am interested in on a day-to-day basis are based on these particular 5 moves. And so again, this is where we look at ATR. So we can have a greater than ATR move to the upside, a less than ATR move to the upside. We can stay flat. Very few times, obviously, the markets close exactly where they opened, or any individual equity closes exactly where it opens, but it does happen, right? And then, of course, we can have a less than 1 ATR move to the downside, or a greater than 1 ATR move to the downside. So these are this average true range. And this will make a little more sense when we get into the charts. I'm not a death by PowerPoint kind of guy. So I do want to get over into the platform as quick as possible. So right now, again, and I want to just take one quick second here to talk about setups, and you're going to learn a lot. There's some great speakers lined up this week, right? Most of us are talking about a particular setup that we like. For me, I'm just going to say, I want to add a slight additional disclaimer here. Make sure you understand the risks of credit spreads and options in general before deploying this system. Now, there's no barrier to you taking this system and paper trading it tomorrow. Okay. That's how I learn and work my way through a lot of systems, a lot of paper trading, a lot of simulated trading. I work with a lot of clients one-on-one who will tell me, well, it's just not the same when you're sim trading. Well, it's not the same because you don't make it the same. If you choose to mentally view it the same way, set up your simulated account with the exact same amount of money you have in your real account, whether it's $500 or $500,000, and view that red and green on your screen as your actual money. Because quite frankly, if you're the type who's just interested in, I guess, that rush of trading, I don't know what you're doing, to be perfectly honest. And we've seen a lot of that in the markets recently, right? We've seen the GME, the AMC. We've seen all these quote unquote meme stocks that have been getting all this media attention. Meanwhile, the rest of us traders are just kind of looking at people on both sides of those trades like, all right, y'all over there, you have fun. We're going to stay over here and trade our systems, right? So don't get too caught up in the allure of a particular asset class or system. Look at everything very mechanically, look at everything systematically. And as you advance in your trading journey, then you'll be able to gravitate towards the things and the setups and the systems and the asset classes that work best for you. So don't always rush into learning. never rush into actual real money trading. I have a whole presentation that obviously we're not going to get to today about how you know you're ready to begin a real money trading career. You can find that on the youcantrade.com website in the events section, past archives. I just want to make sure I state this, because I know we have our disclaimers, but this is a personal disclaimer. Just make sure you understand the risks of options before you're deploying the system. So let's get into it. A sip of coffee here, excuse me. So here's what you need on your chart, guys. We're working off a daily chart here. And I just have a couple of EMAs. Our standard, most of these number 4, 5, and 6 can just be, as we say, out of the box. They shouldn't need any adjustment. The default settings for the 2 standard deviation Bollinger Bands, ATR, and the stochastic slow should be right there. At least they are within TradeStation and TOS, I believe. I don't know any other brokers, but you'll be able to see the settings when I pull them up on the screen. So what are we looking for? We are looking for an expansion of price action and average true range. So again, just to touch a little bit on price action and volatility. Okay. The general thesis in the markets is that we go from price action expansion to price action contraction, right? And we're trying to set up a system or a particular setup that doesn't necessarily need a move at all for us to profit from it. We just don't, it can move for us, it can move against us, or it cannot move. And 2 of those 3 things, either the not moving or the moving in our direction, we collect a profit from. And that's sort of the allure of credit spreads, right? If we can find that sweet spot of credit versus risk of getting your short strike breached, that's when we get to kind of that sweet spot where we're able to collect some credit, even if the markets just stall out. Credit sellers going into this whole mess over the last few weeks, price action's kind of done this, but they've been sitting there collecting some credit, because we've seen huge moves on a given day to the upside or downside. We haven't necessarily seen the follow through of multiple days to the upside or the downside. So there's credit sellers on both sides of this market right now, just sitting back and watching the green roll in, right? So we are looking for an expansion of price action. Okay, because in theory, then after an expansion comes a contraction, and we want to catch that tightening up of the volatility and the tightening up of the ATR. Of course, once we sell a credit, whether it's I don't do a lot of naked selling just because I'm teaching a lot of people who are smaller accounts, but whether you're naked selling or you're selling credit spreads, whether call or put, once you've made that sale, of course, you want that credit spread to expire worthless. You want the value to go completely out of it, and a tightening up of the volatility and the price action will typically lead to that. So even if it doesn't necessarily move in the direction that would give you the most profit immediately, it just kind of hangs out and tightens up that volatility. You're seeing some of those things as well. So we're looking for a touch of the lower B band. Okay, that's the first thing that's going to get my attention. And guys, again, we're going to look at charts of this momentarily. I like to spend a lot of time playing through the charts with you guys, so we'll be able to take a look at that. We're also going to, again, do kind of a live manual scan, look at 30, 40 charts together and just see how this develops. So we want the thing that's going to get my attention, where I'm first going to say, this may be a setup, is when we go and touch that lower Bollinger Band. And guys, this is for a put credit spread. I want to be very clear on that. I know our event is Return of the Bear, but we are kind of still at least a little bit in a bull market. So you can take this whole setup and inverse it for a potential call credit spread. That's not something I've done much with over the past couple of years, just because of the way the markets have moved. But I like credit spread setups in general, because in theory, of course, it's been a long time since we've had a bear market, which probably, of course, that's the theme of this event, means we might be due, right? In theory, most credit spread setups that I trade can be flipped or inverted for a potential play, hoping for downside price action, downside or neutral price action, as opposed to what we're hoping for right now, which is upside or neutral price action. So we touch the lower Bollinger Band, then ideally we get a base support area established, okay? I'm not going to get deep into candlesticks here, guys. I'm just going to say, I think that's something, there's a ton of great material out there. If you don't know if you trade on candlestick charts and you don't know your candlesticks, I don't think you're getting the full picture of price action, okay? I'm also a big believer in long candle shadows, especially to the downside, a multiple level rejection of a particular price level, either to the upside or the downside. I'm big on those as well. Then we're looking for a slow stochastic crossover. Again, we'll illustrate that momentarily. And then the trigger for us, potential trigger, is the price moves over the 8 EMA. This is where we've had these 5 things happen. And I'm not saying these 5 things happen and it's automatically a trade, but these 5 things happen is where I am potentially looking to enter a trade. Okay, now where are we looking at for our strikes, right? And again, you'll see this as we move into the option chain itself. I'm looking for a short strike that should ideally be at least 1.5 ATRs out of the money. Okay, so at least we're going to take that average true range, and let's say we're trading a $100 stock and the average true range is $5. Okay, ideally, then I'd like to be at least $7.50 out of the money, preferably closer to 2 ATRs, but you can't always get that. And again, this is sort of the ideal setup. Sometimes you got to make a few compromises here or there, which we'll illustrate in our options chain momentarily. You just don't want to compromise on everything, right? If you're compromising on all or on the first 3, things here, then it's not a valid trade setup, right? You're just not going to see that. If you can tweak one, maybe 2 of these a little bit, but if you're, for example, you're only 1 average true range out of the money and you're 70% probability of being out of the money, that to me is just not a valid setup, at least within the options chain. So again, we are shooting for close to 80% probability out of the money as possible. So that's something I always put on my option charts. You'll see that momentarily. A lot of people look at implied volatility, IV rank. I do look at those things as well. But when I'm looking at a strike, especially my short strike, I always want to know what is all things being equal, what is the probability that this strike expires out of the money? And when I can get 80%, essentially what that's telling me is right away, I have an 80% chance in theory of realizing the full profit. And in all likelihood, a higher than that probability of realizing at least a part of that profit. Okay. Again, this will all make sense as we get into the chain a little bit. I got to have at least 50 cents credit in these. I'm preferably looking closer to 80. Occasionally you can get $1 if you find just the right setup. But that's about where I need to be. I'm not even interested in it unless I can get at least 50 cents credit. Now, as far as expiration date, that's a little bit of a moving target. I want the closest expiration date possible to get the desired credit. Okay, I'm typically not going to go more than 3 to 4 weeks out on this. So the monthlies are 2 weeks from Friday. If I'm looking at something today, as we will be momentarily, that's probably the sweet spot where the credit is juicy enough that I like it, but the time is enough that I'm not feeling exposed for, a month and a half, right? So as far as trade management goes, sorry. There we go. Oh, I'm sorry. The last step here, try to stay at least 5 wide, max 5 wide on the strike. Sometimes if you're doing Tesla, if you're doing Amazon, this isn't necessarily going to be the case, but that's ideally where I want to be. Now, trade management, I usually let the trade play out if it's going against me. Okay. Because the way I do this and with my account size and with my personal preferences, I'm typically not going to initiate this trade unless I'm comfortable with assignment, right? So, if that stock pulls back so much that my short strike, it looks like it's getting hammered, I'm probably okay getting put the stock at that price. That's a consideration that I'm going to take. And obviously, if you're trading some of the quote unquote blue chip companies, in the markets that we're in right now, in this frenetic buy the dip type of mentality we've been in for several years now, you're typically okay owning a lot of stocks on a pullback. Again, that will always work until it doesn't, right? So there may be a situation where you get caught holding the bag on that. Now, for newer traders and small accounts, first of all, know your pain points, right? Like know where this trade is going to get in your head and start affecting the way things are going for you. A possible stop is the twice credit received. So, for example, if you get that 50 cents, once you're showing $1 loss on that, then you exit the trade at that point. This is obviously then where winning percentage comes in and where we need to be getting closer to that, as close to that 80% as possible. So in theory, if we went on 80% of these trades, only 1 in 5 would go against us to the point where we're closing it for potentially double the loss of the credit. You can do a little tighter than that. So I know one gentleman I taught this system to did it 1 for 1. So if he got 60 cents, of credit, as soon as it's showing 60 cents loss, he's out. He struggled with getting stopped out of too many trades because one day goes against you, and all of a sudden you're maybe getting a little panicky. Okay, so that's something that just kind of keep in mind with credit spreads. You guys know, as far as where am I taking profit? Ideally, I'm letting this thing expire worthless. Okay. I would say about half the trades, half of my winning trades in this system over the years, I have done that. If it starts to get a little, if I'm seeing maybe, let's say I get $1 in credit and I'm seeing 80 cents in that with a week or 2 weeks before expiration, I'm going to take that win, right? If I can get 70 to 80% of the max profit, especially within a couple of days, because sometimes you will see that bounce in your favor coming off that 2 standard deviation Bollinger Band, then by all means, that's something that I would just go ahead and close. Actually, sometimes in this, I've gotten 50 to 60% within 2 or 3 days, I'll probably close that as well. Once it's to the point where you're like, gosh, I'd really like to put that money in my pocket right now, by all means do that. When you keep a trade journal on this, that's where you begin to see some of these points of, what, I took profit too early here, or, not early enough, etc. Again, I have whole courses on trade journaling, guys. I'm just going to, one quick aside on that. I think, and this may seem like a strong statement, but I'm going to make it anyway. I think if you are a newer trader and you are not keeping a trade journal, a detailed trade journal, both trade mechanics, trading psychology, what you're doing right, what you're doing wrong, I think you're wasting your time. And again, that may sound harsh, and that may sound like a strong statement, but that is what I believe, because that is one of the things that took me from the markets kicking my teeth in on a daily basis for the first 6 months that I was a full-time trader to being consistently profitable about a year later. It wasn't just one thing, of course. Everyone, what's the one thing? Well, it wasn't one. But if you're asking me to rank the top 3, journaling and journaling, trading psychology, and rules-based systems are the 3 that I got to put up there. So right now, guys, we're going to get into my platform. And we're going to take a look at so I have a workspace specifically dedicated to this. If you are a TradeStation client and you want this workspace, just shoot me a quick email, put workspace in the subject line. Now, again, guys, I try to get back to all client emails within 24 hours after events like this. And I did a big webinar for us last night at YouCanTrade. I tend to get a little backed up, so please bear with me. But I'm going to spend probably most of tonight while I'm waiting for the late night hockey to start to answer some emails. So I hope to get back to these fairly quickly. And again, if you're watching a recording of this and you have any questions, feel free to email me, matt@youcantrade.com. So let's go ahead and get into it here, guys. All right. So here is the workspace that I have set up. And this is my master watch list. And I'm consistently adding, taking things off, adjusting. You'll notice this isn't a big watch list. Now, just because something's not on the watch list doesn't mean I won't take a trade in it, but it's these stocks, these 150 or so stocks that I will look at their charts. This is I can send this to you if you want as well, guys, my master swing trading workspace. I'm going to look at this chart, group of charts, weekly, daily, 60-minute, 5-minute on these stocks. These are the same ones. I'm going to look at these 10, 15 times a day. So I become very intimately familiar with the movements. Some of these stocks I have a great feel for, especially some of the tech ones, or I have a good history of trading because their movements appeal to me. So again, that's something that we want to. I always recommend having a master watch list. Start with 5 stocks and look at them 10 times a day. If you have the time, some people don't. Look at them twice a day. Look at them at the beginning and the end of the day. Do that for a week. Then you add 2 or 3 more names. By the end of the year, you have a master watch list where you've been watching, daily movements in these stocks for quite some time. If I haven't traded a company in quite some time, or I haven't looked at their charts for quite some time, I'm probably not going to trade them. I may start watching them, may add them to the watch list, may take them away from the watch list, whatever the case may be. So what I want to do right now, there was a couple names in the notepad here that I wanted to take a look at that have potentially current or recent setups. One of them we're looking at right now is Amazon, and we've been keeping an eye on this for quite some time. So let me zoom in on this. So first of all, what do we notice here? Our ATR is ticked up a bit, right? It's gone from down here at 68 up to 74. So we've seen now price action expansion. Okay, so we're getting a little, a little more movement on a day-to-day basis. We're down here on this bull band line. We're touching it, right? Okay, we've tagged the 8 a little bit. All right, but I typically like to see a close above the 8 before I'm making a move on this particular trade, right? So, and if we can't really see this, let me zoom out here. And the stochastics are just kind of starting to cross over here. You can't ignore horizontal support and resistance in this as well, guys. Thankfully, we're coming into a bit of a support level down here. So what I'm looking at now would be a bounce, a push back over 3,100. And if we close above the 8 EMA, I will be looking for that potential setup. Now, a couple more that we're watching pretty closely right now is Tesla. So Tesla has actually breached pretty significantly the bull band here, and now it's starting to tick back up. What I love about this chart, and what I always love about charts, where I'm a big believer in the 8 EMA. I've seen the speaker list this week. I know you're going to hear this several times this week, or today and tomorrow. This 8 EMA, this trend line. Look at how this is acting as resistance here. Okay, so in theory, no guarantees, but in theory, as this begins to push over the 8 EMA, it potentially gives us a setup. Okay, let's take a look at what was the other one. Lowe's was the other one here. Okay, so Lowe's is another one, and this got real close. In fact, we were in my trading room. We were sitting scouting credit spreads. We were looking at this one, right? So we went up all the way to the 8 EMA over here. Let me zoom in here. I know this gets a little convoluted when we zoom in, but got all the way up to the EMA and was rejected there, right? So hasn't been above the 8 EMA since the 19th. So, but again, we've gone down and tagged this bull band. Looks like we may want to go try this area again. This kind of this short-term support area. But look at this price action expansion over the course of about the last week and a half or so. That's beautiful. That's something that I'm definitely going to be paying attention to. So I wanted to look at, and I wanted to show you guys here just how, again, Tesla is not a go trade for me here, but I do want to go into the options chain and let you guys take a look at how I would set this up if it were a go trade here. Okay. So what's the first thing I'm going to do? I'm going to look at our ATR, and the ATR, let's say 40. Okay. When it's this high, I'm going to round it down to 40. Our price action right now is at 682. So we'll say 680. So 1.5 ATRs here would bring me down to 640 to 620. Okay, so 40 times 1.5 is about 60. So ideally would like to get $60 below this as my short strike. Again, it doesn't always work out that way. So let's go into the options chain here and let you kind of see how this could potentially play out. Again, this is for demonstration purposes. This is not a go trade for me at this point. Oh, I'm sorry. This is, I got to add our options chain here. Sorry, this thing's going to be difficult for me right now, isn't it? There we go. Okay. All right. So first of all, I'm just going to look at the regular option chain. I'm not going to set this up so much as I just want to find my short strike. I'm not worried about the spread yet. I just want to find my short strike. So I ideally want to be at 620 or lower. So what do I need here? I need 100. So obviously I'm not going to get that in 2 days out, right? So I'm going to look at this March monthlies. I'm going to go about 2 weeks out. So can I get down to about 620? And that's 74%. So I actually really like this here. I may even drop down to 615 and get a little closer to that 80 level, right? So the next thing I'm going to do is then set up a potential short put vertical. And these are 5 wide because they trade in 5 wide strikes, right? So this 615 to 610, right now, the bid on this is 85 cents. Obviously, the ask is a little higher. I try to hit the midpoint on these. Obviously, these are going to move around quite a bit. So again, this is not a go trade. We have not hit the trigger. But if we were in there, this would be about the area I'd look at. Now, if it were a little higher, it may force me up to these 620 by 615s, right? Again, in theory, we'd probably have to go up a little bit, but this is the basic process that I follow. And again, it doesn't show probability out of the money here because it's a spread, but absolutely, guys, this is the thing. Oh, hold on. Why did the chat window just jump in there? Excuse me, guys. I need to move this. There we go. So this is the thing that I am predominantly looking at, this area, and it's not on most default charts. So this is probability of out of the money. So again, under the options model, all things being equal, the 605 put strike has an 80% chance, approximately, obviously it's oscillating a little bit, of expiring worthless. So this is the area I want to be selling in, somewhere between the 75, close to 75 and 80. The closer to 80, where I can still get my credit, the better. This is kind of the sweet spot as far as expiration, being out a little over 2 weeks. So probably Thursday or Friday, if I'm enter a trade in this, I'm going to have to go out here. I don't want to go more than about 25 days. I know there's some models that show that, getting out here is the best place to sell credit. I just don't want to worry about it for that long, especially in this kind of market environment, right? So that's basically there. So what I want to do now, I'm going to just really briefly, I'm going to share something we just started over at YouCanTrade, and then I'm going to take questions until the top of the hour. And they can be questions on the system. They could be about anything trading related. Okay. So I want to just take we're doing a very special thing for all the people that are here today and all the people that have signed up for here. We have a very special Westmark's Associates offer. So I'm going to put this up here, and I will drop the link to this in the chat. And I know there will be other places where this link is made available to you. Oh, there you go. Thank you. I appreciate that. So we have an all access pass. We just started this. We typically charge $200 a month for this. But you guys are going to get it for $75 a month. That's your lifetime cost per month, as long as you choose to stay. And what is involved in this is you get access to 5 trading channels. Now, I'm the Two Roads trading channel, the SC Trade channel, and Fast. They're the 3 channels that run a live trading room for multiple hours every day. I day trade futures and swing trade options, directionally swing trade options. I do some credit spreads. The SC Trade channel, that's my buddy Sean. We call him Captain Credit Spread. He sometimes has 30, 40 trades on at once as far as credit spreads go. The Fast channels are my friend Eric Waddell, who is a intraday futures trader, not a scalper, much slower, looking at hourly type stuff. Shantanu, he just joined our team. He is an earnings specialist, so he does quite a bit there. The quant channel just gives some ideas and some recommendations. There's not a room that's associated with this. All of our rooms have trading alerts. I just sent out a trading alert for a nice win in LVS this morning. You get, so real time, you're going to get access to what we're doing. We have trading room archives. There's some online courses that come with it. There's a ton of value here. If you were to subscribe to all these individually, it's $506 a month. And we, because people want to be part of all of them, we set it down to $200. You guys are getting an even better discount. So I'm really excited to offer this to you guys. And again, if you have any questions on this, feel free to reach out to me via email. So guys, I've got the chat pulled up so I can see the chat. So why don't you fire off any questions you have? Maybe you got questions about the setup, trading in general. We can look at some things as it's happening live, but I got about close to 15 minutes here. So fire them at me.
Yeah, we're good. Hey, Matt, great presentation there. And I was actually picking off some questions as they came through as well. So why don't I start by feeding you some of these? One of the questions that came up in the chat panel was, you had mentioned, I think at the beginning, that you are a day trader and you're also a swing trader of options. And I think you also said that the setup that you use is similar in both cases. Can you show a slide of one of your day trading setups where you've got the ATR and the other things there so we can see that?
Absolutely. And let me I closed that because it was making a lot of noise. So let me go ahead and open that right now. There we go.
Futures tend to do that.
Yeah. Well, I have all these alerts set up and they beep and boop like crazy. I actually don't use as much ATR within the future setup. I use a basic, and again, this is a system that we're developing within the room right now. It's very exciting that we're doing in our live trading room. We've taken a system, we're about 4 months into this, from scratch, and we're building it out. And every day we meet, we live trade it.
Okay.
And then we make journaling entries, we take screenshots, we do, I mean, we show the work. A lot of people, I mean, there's a lot of great trading rooms out there that, here's our systems, trade it, don't trade it. Here it is. Do what you want with it. We're showing how the sausage is made, as unpleasant as that is sometimes. I want people to understand and this is the huge emphasis that YouCanTrade places on education. Yeah, we have trade alerts. Yes, we have experienced traders, and we really like what we do, but we also want to show you how these systems are built. The system that I just showed you, I didn't show you the work that went into that for almost a 2-year period with me and a gentleman that I was trading with at the time, right? So we're going behind the scenes in this. Now, I still have the directional options that I trade on a day-to-day basis.
Sure.
And we're starting to see some good early returns in the system, but we're pulling back the curtain a little bit and letting you see the ups and downs, letting you see some of the struggles that even experienced traders have when they're deploying a new system in a new asset class. So it's very exciting.
Outstanding. And Matt, while we're looking at this, there was a question that came in, which was, what do you use the 3 EMA for?
Well, do I have that on? No, I don't have this on that chart. The 3 EMA I am a big 3-8 EMA crossover person. In fact, that's the trigger for this future system. Now I have other prerequisites for the trade.
Okay.
I've got my Keltner channels here. I've got some Bollinger Bands, and there's a couple other things that we're looking at as potential parts of this trade. But I am a big believer. I'm a big moving average crossover guy. And, the stochastics and the MACD play into that a little bit as well. But, the simplest, for me, the simplest way that somebody can show a change, even just in the short term in momentum, or whether it's a change in momentum or a slowing down of momentum in a particular direction, is a moving average crossover.
Okay. And also you mentioned something that was extremely important to you, and that was the value of journaling. And to that point, I mean, journaling is one of those words that can mean different things to different people. Are there any particular templates that you can recommend, or tools that you have at YouCanTrade or whatnot that are in fact journals that help me, can help us as traders know what to log, what to comment, etc.?
Yeah. Well, there's 2 things that I do for journaling. Now, there are a number of journaling software programs out there. I use one of them. I don't know what I can mention or not based on YouCanTrade and this or that. YouCanTrade itself, we don't have we don't have like a specific journaling software, but there's a number of great journaling software programs out there. Almost all of them offer trials. So I'd recommend trying some of those, but I also just simply use Microsoft OneNote for additional notes. So here's an example of what we were looking at yesterday. And most days I write a little more than this, but we do this journaling together in my room. So yesterday we weren't seeing the types of setups that we like, and we were following our rules, and we were getting popped out of some trades, right? And so now once the market settled, we went and took what was a red day and made it a green day, slightly green, but a green day nonetheless.
Okay.
So then I went in and made these notes, and at the end of the week, then I'll go back and look at the actual journal. I'll look at the notes. Even something as simple as Excel is a great place to start, but I think it's mandatory. Again, for me personally, I think it's mandatory to not only record the trades, you need to journal the trades, which is, here's why I got in this. Here, if it's a swing trade, you should make 2 entries a day about, I'm really struggling with this because it's not doing what I thought it would, but it hasn't hit my stop yet, so I'm still in it. And journaling those thoughts and emotions, because obviously, as we know in trading, thoughts and emotions are things that we need to work on getting out of our trading.
Absolutely. Do you take screenshots from time to time also to supplement your notes?
I do. The journal software that I use automatically puts some in there.
Okay.
But I will if there's a particular okay, this was a great setup and I missed it, I'm gonna screenshot that into this OneNote. Or if it's something, this wasn't a setup, why did you take this trade, dummy? Then I'm gonna put that in the OneNote as well. I don't want to clutter too much of that up with the screenshots, but if it's a particular good example of something, then yes, I will screenshot it in there.
Sure. And I tell you what, I don't want to put words in your mouth, Matt, but I think once again it came out loud and clear to me, which was, hey, trader, anytime you're learning something new, before you risk real dollars on it, make sure that you back test it, you get comfortable with it, and let your journal be your guide, because that's where all the information is going to be that you have to have. Fair statement, Matt?
Absolutely, without a doubt. I think that's stuff that's and all of that goes into. I listen. I don't care. I know what I use. I don't care what platform you use. You should learn the tools of your platform. Most platforms have some great back testing software. I use that. I also just eyeball. At the end of the day, I'm going to go, when I was first developing the beginning parts of this future system, at the end of the day, even though if I'm not actively trading it, I'm going to spend a half hour at the end of the day going back and looking at every setup and what happened and making notes on that. So yeah, I think keeping tight records of everything that's going on shows you where the problems are in your trading. And even, listen, I've been doing this for quite some time. I'd like to think I'm pretty good at it. I think the numbers show that, but I still have problems and I still need to work them out. And the only way I'm going to know what those problems are is by keeping very detailed records and going back and referring to them.
Great. A couple other questions just came up here, Matt. When you were talking about your watch list and how you've been able to mature that list over time, and then I think you said that, hey guys, start with 5 companies and then build on that. What are the kind of parameters? What are the things that you look for in a company to even make it on that watch list? Do you use a scanner for that, or are there certain metrics you're looking for?
Yeah, it's really just kind of I love the large caps. You see the names that are on here. It's some of the big blue chip names. I always favor towards tech just because that seems to be where you learn sectors and or areas where you seem to just see things a little better. And I don't want to call it a gut or being intuitive because that takes away from the work that goes in. And I don't want to say trade with your gut because that's one of the dumbest things you could do. But I tend to gravitate towards tech. Somebody else may gravitate towards transportation or stuff that's more involved in like the Dow, the industrials. Tech is something I've always sort of gravitated to. It's a little more dangerous, I think, with the movements, but when you're kind of the patterns that you use. I'm a big breakout guy, breakout and break down within like these charts here. The basic setup, like I can just show you, like it's come in a bit, but we sold it for a nice profit this morning. We grabbed an LVS call close to the end of the day because we were setting up for a breakout. Now we did get that this morning. Who knows if it confirms or not? We took our profit. It can do whatever it wants right now, right? But I'm a big breakout, breakdown guy, and tech seems to be areas where that works the best for me.
So once again, I think your advice there is, go where you're comfortable, from that standpoint.
And don't limit yourself when you first go into it. Pick. Pick 5 company, look around your office, find 5 products that you use and start with those 5 companies.
Okay. Excellent. Just a small point. When you had a Tesla slide that was up, and you were basically saying, "Hey, it looks like it might push above the 8 EMA and be a possible setup." And this was a question I had. Were you inferring that there might be a reversal, a short setup there, or since it's going through the 8 EMA, is that a possible long for you?
Well, that would be if it goes to the 8 EMA, and I'm not really seeing anything today that looks like it wants to today. But if it were to head up there in the next couple of days, I would be seriously looking at this for that put credit spread setup that I was demonstrating.
Okay.
So this would be a valid setup and a go trade for me if it gets above the 8 and looks like it's going to close above the 8.
Okay. All right, Matt. Well, I tell you what, we got time for one more question. It's a question I'm going to ask every presenter today. So, Are we going to see the return of the bear? Question mark. You have any thoughts?
Well, I love being first. You put me on the spot with this, right? Listen, cyclically speaking, like it's inevitable, right? Like we're going to see that at some point. Now, that being said, I think with the era that we're in and sort of the tech era that we're in and the news era that we're in, people talk about the 24-hour news cycle. We're not in a 24-hour news cycle anymore. We're in a 2 to 4 hour news cycle. Absolutely. On a day-to-day basis, right? And it doesn't matter. You want to talk about sports, politics, news, world events. That's our news cycle now. So I almost think that we're going to see more situations like we saw in the spring with the COVID crash. Now I know that was obviously very fundamentally driven, worldwide pandemic, whole economy shut down. But I think that's going to be more of the standard going forward than these multi-year things like we saw in 2000 and 2008. I don't know that maybe even in my lifetime, we're going to see a 3, 4, 5 year bear market. I guess never say never, of course. Right. But I think we're going to see almost micro bear markets from time to time. So is there a bear market coming? Well, I think inevitably. I just don't think it's necessarily going to look like what we associate with bear markets of the past.
Sure. And from, just as a quick little follow-up question there, has the potential for that impacted how you trade or approach the market?
Yeah, well, it has, because with each subsequent year that I trade, I shorten my time frames.
Ah,
I've noticed this. When I first started trading options, I was looking at hold times of, let's say, 1 to 3 weeks. Now I want overnight. Like, I want 1 to 3 days. I've gravitated more and more towards day trading. That's why and I've done this futures simply because we have a lot of clients that have smaller accounts, and obviously if you want
sure.
to day trade futures, you don't need to worry about the pattern day trader stuff. So even though they're wild and pretty dangerous if you don't know what you're doing, of course. But
Right.
yeah, this has affected how I trade, because every year I've shortened my time frame. You could easily say to me, Matt, in 2 years you're going to be nothing but a full-time day trader, and I'd absolutely believe you.
Okay. A couple other quick questions came in here, Matt. One was Sherry says, "Hey, Matt, I'm from Ontario, Canada, and I trade on IB. Is
Yeah.
TradeStation available for Canadians?"
Well, let me answer that. I think you can get the data, and I don't know that you can actively trade on it, but let me refer that question to TradeStation customer support. They don't like me jumping out on those.
Okay, great. Super. Well, Matt, listen, thank you so much for your time. I know you're a busy guy. You reflected on the fact that you had a webinar last night. You were
Mhm.
watching night hockey, late night hockey. Did I hear that correctly?
Tonight.
Oh, tonight.
I'm a St. Louis Blues fan. My whole family's from St. Louis. So, in fact, I went down to some games last week. I took a kind of a mini vacation. They're on the West Coast right now, so it's these, like, I'm in Central Time Zone. It's these 9 o'clock start times, and I'm not 21 anymore. So that's
I hear you, buddy. Well, listen, thank you so much for your time today. Terrific presentation, and I hope you have a great day, my friend.
All right. Thank you, Raleigh and Pat, for having me. Best of luck with the next 2 days. I hope everybody learns a ton, and reach out to me via email if you have any other questions. So thanks, guys, and have a great rest of your day.